All right, traders, happy Friday to you. Fridays are always a little bit challenging for just about everybody because the markets tend to take on a whole different personality going into the end of the week. Weekly options expiring and just a lot of dynamics pushing and pulling stocks around. I want to take a look at Tesla today. I know you know that this is my favorite in terms of intraday trading opportunities just because it has the range, it has the volume. It's just an easy stock to get in and out of. But it's very important that you stay on the right side of it and that you establish what the trend is or what the directionality is for the day before you start making trades. Tesla tends to pick a direction and stick to it for a while. And if it is going to have a reversal, the reversal will come and do the same thing. It'll put in a very protracted kind of a move. And once you're in front of the opportunity, the thing to do is to wait and see if you get a pullback in the direction of the trend, wait for it to come to a logical level, and then get in. So a lot of the day today was spent sitting on our hands because this big move, that big blue arrow, tells you we are in an uptrend. My 7-year-old, when Connor was a young boy, used to tell people exactly which direction a stock was going to the amazement of everyone. He knew what the trend was. It's not so hard. You just have to look at the chart and see what's happening. Now that put us in the position of not having any trades at all during that time frame right there. So there's nothing you can do. If your trading style is, what we're talking about in the room every day, then you're going to avoid taking trades when something is in a runaway. You don't want to hop on because you never know when the thing is going to reverse. A pullback to what would be a logical entry could wind up being a pullback that costs you big dollars and winds up being a stop out. And then you wind up seeing this kind of a thing. If you're the last guy in, 393.17, and it came all the way down to 388, which was a logical entry point, you probably stopped out somewhere in here, got hit for a $5 loss, and then watched as price went and rebounded. That's enough to make anybody sick. So the important thing to do is to wait for the opportunities to come to you. You can see here, right around the time that we came back from our break, exactly around the time that we came back from our break, we saw the market come in. And the threshold level that was set for Tesla was right here, this line. So that dotted blue line, I've got the red line overlaid. Now that was the area that we had anticipated a long opportunity, and that's based on this dip down below that popped up 388 up to 389.90. So nice move, so almost a $2 move there. We knew that we were going to have to look for elasticity down to about here. So you can play this one of two ways. One is to get in as soon as price comes down and hits this red line at 388. And then the stop would be down below there. It would be down below this excursion that price had down into this area right here. If, on the other hand, you want to wait for price to dip, then you can look for an excursion down below the line that doesn't go any further than this and then reverses. And that's the trade that I like to see set up. So on something like this where we've already had a test, we've had a test below the line, but we know that we want to keep that line because of what we've seen going on right here. We know that we want to keep that as a threshold level. That's a real good way then to get in front of the opportunity. And if it doesn't dip the line, it's just opportunity cost. If it never came down below here and it just hit the line and went up to the target, well, that's okay too. You have to sit on your hands sometimes and just say, I'm not going to catch every single trade. Then, over the rest of the day, we were waiting for a move back down for a retest of this, down into this 393.17 level. And you really had to sit here almost the entire day before the trade set up. So let me show you where we had confluence and why that indication was the one that wound up being probably the last trade of the day here today. Pretty much most of the afternoon session, we saw a whole lot of nothing going on. We never came back down to that 392. It was, 73 on the other one here. We've got it right at 80. It's going to be a little different depending on where you draw the lines, but it never came back down and touched this line. So the entire time that it's sort of jockeying for position, trying to get up, up, up into these prior highs, you can see it just always reversed, but never quite got down to that threshold level that we were looking for until right here. And when it did, price came down. It ran right into the 2 standard deviation threshold. Did a little earlier, actually, it's right here. Ran into that 2 standard deviation excursion. So we got 2 ST of volatility away from our average. We're coming back up again. Get another opportunity at the line. So actually, if it got you in the first time, you had to endure a little bit of a drawdown here and just barely dip down below where your entry was, and then comes in right off that 392.80 threshold that we established based on support and resistance. It also comes in, hits 2SD, hits this little void, and gets into this volume by price threshold here. And we get the inflection and the bounce. Target on the 392.80 entry, really you're looking about 394.40. Unlikely that you would be anticipating this move all the way up to the 2 standard deviation top band. If you were, good for you. But, in most cases, when you're down 2 standard deviations, what you know is you've got a 95% probability. You're in the 95% confidence interval of the mean. And what you think is going to happen is a move back up to the mean or toward that mean. You don't know that this is going to happen. So if you have a resting order here, you're out. And if you get to that line and price just plows through it and you're going to do a manual order to exit, then you've just constantly got to be thinking about the trail. Where would you trail it? I would say right at that 394.40 line. That's the average. Once again, if you revert there, you're back at your original profit target. But you had all this opportunity up here. Like I said, if you got it, good for you. I didn't, but this blue line I thought made for a really good target. So again, I'm going to say Fridays, a lot of the day is going to be characterized by some volatility. Traders tend to go home early and the machines are taking over and the machines are just sort of driving the market over the course of the session. If you sit on your hands most of the day and wait for them to come to you, it can still be profitable. Have a great weekend, you guys, and I will see everybody next week.